JPMorgan Chase's Q2 2023 earnings call reported net income of $14.5 billion, EPS of $4.75 on revenue of $42.4 billion, with a ROTCE of 25%. The integration of First Republic is progressing well, and the firm saw strong performance in various business segments. The CET1 ratio remained flat at 13.8%, and the bank plans to increase dividends in the third quarter. Overall, JPMorgan remains optimistic about its performance despite economic uncertainties. During the Q&A session, analysts asked about JPMorgan Chase's net interest income, NII, guidance and the implications of higher interest rates on future NII. Jeremy Barnum discussed deposit behavior, noting that the bank is seeing stable deposit pricing and an increase in certificate of deposit, CD, mix. He mentioned that the current level of NII generation is not sustainable and expects it to decline in the future due to competitive dynamics. When asked if the rate outlook affects the transition to a lower run rate, Barnum stated that the evolution to a more normalized NII level is not rate dependent. Another analyst questioned the natural return on tangible common equity, ROTCE, considering the changing rate environment and potential Basel III requirements. Barnum mentioned that the 17% ROTCE target was always based on a normalized rate environment and expressed confidence in the bank's ability to deliver excellent returns through various scenarios. Jamie Dimon added that they consider different businesses with different levels of ROTCE and mentioned that credit card normalized ROTCE is closer to 3.5%. The topics of capital planning and buybacks were also discussed, with Barnum mentioning that complying with new requirements early is important, but sacrificing investments for higher capital is unlikely. Buybacks are considered at the end of the capital hierarchy, but their role in the next few years will depend on other factors. Lastly, analysts asked about loan growth and consumer behavior. Barnum mentioned that they expect robust card loan growth but anticipate relatively modest loan demand. Analyst Gerard Cassidy asked JPMorgan Chase's Jeremy Barnum about the bank's view on measuring the treasury functions and asset liability of the balance sheet as interest rates approach the terminal rate. Barnum mentioned that there hasn't been much change in their positioning, although they have been biased towards higher rates. He also discussed reserve building in the commercial banking segment due to office real estate and downgrades in the middle market segment, but cautioned against drawing broad conclusions from these specific examples. Jeremy Barnum from JPMorgan Chase stated that their ability to sustain pricing power depends on the product and competitive landscape. They anticipate deposit betas to accelerate in the future, which may impact their NII. The decision to change rates will be influenced by feedback from the market and competition. During the earnings call, Jeremy Barnum and Jamie Dimon discussed the importance of feedback from the market and competition in determining pricing power. They also mentioned that deposit betas are expected to increase, impacting net interest income, NII. Dimon emphasizes the need for competing products as interest rates rise. The discussion also touches on liquidity metrics and the impact of deposits on NII.